Hey everyone, if you've been feeling totally whiplashed by crazy market trends lately, or honestly, if you're just exhausted by the constant noise from financial news networks, well, you are in the perfect place. Today, we're diving into this explainer on Benjamin Graham's absolute definitive masterpiece. We're going to discover exactly how you can protect your wealth from the chaotic hype of the stock market. We're going right back to the fundamentals. To really grasp the sheer authority of what we're about to unpack, just look at what Warren Buffett has to say on the cover. He literally calls this by far the best book about investing ever written. And let's be real, when the Oracle of Omaha speaks, we listen, right? Buffett was actually a student of Graham's, and he used these exact same principles to become one of the wealthiest people in human history. So this isn't just some book, it is the absolute bedrock of modern value investing.
But before we get completely lost in the numbers, we really need to talk about human nature. The philosopher Blaise Pascal once said that all of humanity's problems stem from our inability to just sit quietly in a room. And man, that perfectly sets the psychological tone for us, because it proves that your biggest enemy in finance isn't the market itself. No, it's actually your own restless impulse to act, to trade, to just react to whatever the latest headline is.
All right, Section 1, meet Benjamin Graham, the master of value. Let's look at the man who totally transformed money management from what was basically medieval guesswork into a modern, disciplined profession.
What's super interesting here is how Graham completely redefines intelligence. For him, it's a trait of character, not pure brain power. You don't need some stratospheric IQ, elite math skills, or secret inside information to succeed. What you actually need is patience, discipline, and emotional control. True intelligence in the stock market is entirely about behavior. It's about having the guts to stick to a proven framework when literally everyone around you is losing their minds. Moving on to Section 2, investing versus speculating. We really need to draw a hard line here between treating the market like a real business and treating it like a casino. You see, Wall Street often loves to deliberately blur this line. But this stark contrast shows how people who invest make money for themselves, while people who speculate just make money for their brokers. An investor values a business based on cold, hard facts. A speculator just stares at the ticker price, gambling that somebody else is going to blindly pay more for it later on.
Graham gives us 3 super strict criteria for investing. And the crucial takeaway is this: if your financial moves don't check off all 3 of these specific boxes, you aren't investing, you're gambling. First, you have to thoroughly analyze the underlying business. Second, you must deliberately protect your principal from serious loss. And third, you have to aim for an adequate, realistic return, not some crazy overnight moonshot. Skip even one of these steps and you're operating a speculative gamble. It really is that black and white.
So why is avoiding that gamble absolutely crucial? Well, to put this into perspective, let's say you ignore Graham's rules and lose 95% of your money on a really bad speculation. And hey, this actually happened to a ton of people during the dot-com crash. To recover, you would need a staggering 1,900% gain just to get back to zero. Taking a foolish risk puts you in a hole so deep, mathematically, it's almost impossible to climb out of. Which brings us to Section 3, the illusion of sure things. Let's talk about those alluring but incredibly dangerous myths of the market. Graham warns us that obvious prospects for physical growth in a business totally do not translate into obvious profits. By the time an industry, whether it's airlines back in the 50s, the internet in the 90s, or the massive AI trend we're seeing today, is universally recognized as the next big thing, the stock prices are already dangerously inflated. Growth does not equal guaranteed profit if you're drastically overpaying for your ticket to ride.
And listen, even the absolute smartest people in history fall victim to this crowd psychology. Take Sir Isaac Newton. The guy was a literal genius who calculated the motions of heavenly bodies, yet he suffered a catastrophic financial failure. He initially made a nice profit selling his South Sea Company shares, but then he got swept right back up in the crowd's madness. He bought back in at the absolute peak and lost the equivalent of over $3 million today. He had the IQ, sure, but he completely lacked the emotional discipline.
Let's agitate this a bit more in Section 4. Beware of magic formulas. We need to dissect this chaotic culture of day trading and magic stock picking tricks. Wall Street absolutely loves to sell you a shortcut. Take the trendy foolish 4 strategy from the 1990s. Laying it out step by step visually like this really highlights just how arbitrary it was. It required zero real analysis of the underlying businesses. It literally just told people to blindly shuffle around some Dow stocks based on their price and yield, dump a massive 40% of their cash into one stock, and just wait to get rich. It was incredibly unanalytical and wildly risky.
The promoters promised people this magic formula would trash the market averages. But when we compare the hype to the reality, well, relying on statistical flukes instead of business fundamentals ends up crushing the speculator, not the market. In the year 2000, this concentrated, unanalyzed portfolio lost a whopping 14%, while the Dow only dropped 4.7%. It failed every single one of Graham's criteria for true investing.
Graham already knew that any mechanical formula for beating the market is doomed to fail the very moment it becomes popularized. It's a self-destructive process. If it's just a statistical fluke, time is going to expose it. But even if it actually worked, the second the public finds out about it, the advantage gets rapidly arbitraged away. The market is just way too smart for cheap shortcuts.
So, what's the ultimate solution? That brings us to Section 5, the intelligent investor mindset. Let's bring the focus right back to you.
We have to deeply recognize that the secret to financial success is actually inside yourself. As Graham says, the investor's chief problem is likely to be himself. Success requires you to harness your own emotions rather than blindly following the crowd. When the market is crashing, human nature literally screams at us to sell in panic. When it's soaring, FOMO tells us to buy at any price. The intelligent investor? They completely ignore that noise.
In fact, the intelligent investor flips conventional panic completely upside down. You should actually dread the overvalued peaks of a bull market because they make stocks way more expensive and therefore fundamentally more risky. On the flip side, you should welcome the sanity of a bear market. It puts great businesses back on sale, drastically reducing your risk. Seriously, changing that perspective changes the whole shebang.
Now, because human nature makes the urge to gamble almost unavoidable for a lot of us, Graham suggests strictly confining your speculation to a tiny, walled-off mad money account. If you absolutely must speculate, cap it at a maximum of 10% of your total wealth. Never, ever mix it with your real investments, and absolutely never add more money to it just because you hit a lucky winning streak. Treat it exactly like a weekend trip to a casino, expecting to lose exactly what you bring.
So, as we wrap up this explainer, it all comes down to this one question. Are you an investor, or are you just playing the market? Do you truly have the discipline to be a long-term business owner, to analyze the facts, and to diligently protect your principal? Or are you just another gambler taking your chances at the Wall Street casino? Honestly, your honest answer to that question is going to determine your entire financial future. Thanks so much for joining me to explore Benjamin Graham's timeless wisdom, and we'll see you next time.